Hello everyone, welcome to this episode of Market Pulse. I'm Ajit Mahuli, the founder and mentor at Learn Price Action Trading. Let's take a look at what the indices have been doing and are likely to do in the coming week. Remove everything here. All right. So Nifty on the monthly chart, shy of the all-time high. The previous all-time high was 887.60. This time the high was 881.45. It just failed to give a new high, though it can still do it this month based on the monthly chart. But the smaller term time frame will provide us more information about what is likely to happen. So that's a monthly demand zone. I mean, technically, it is this area of demand zone, which has been retested, and the fresh area of demand zone. I mean, not the fresh, but the best area of demand zone is somewhere close to 15,500. Now, the monthly trend still remains up, but we are seeing rejections this month. On the weekly chart, so we went beyond the weekly supply, but that was the all-time high, just shy of that, and we started selling off. And the next area of demand zone on the weekly that can be looked upon as some area for buying is going to be, let's say, 18,259 or let's say 18,250. That's the weekly demand zone we have. Now here we do have RVR thing, but since it has failed to break it, maybe we could see a weekly base candle, that's all, and probably it could continue moving down further. And the next demand zone on the weekly chart is somewhere close to 17,635. So many demand zones stacked, but remember we are very high on the curve, a one-way move without any significant pullback. So there could be a deeper pullback that could happen probably in July. We could see this move coming down. On the daily chart, that's the best area of supply where we had a pro gap and then a novice gap and then a pro gap, and there was a smaller time frame fresh areas of supply zone. And this is a very compressive kind of move up where every demand zone has been tested. So the minimum move, if this continues moving down, the minimum move that you can expect is 18,500. That's where it can go. It looks less likely that it can go and make a new high before retracing at least 18,640. That's the drop base rally kind of formation, but I'm not keen on that. The fresh area of demand zone is all the way here. However, I don't know whether it will come here this month unless there's some bad news coming out globally and we have a steep fall, a week or 2-week fall. Otherwise, a short target one would be somewhere close to 18,500 and then somewhere close to 18,300. So I won't be getting into any bullish positions unnecessarily because we are very high on the curve, and this kind of move, maybe just this is how the fall could happen. So be careful about long positions, and FNO longs should be avoided, and confirmation shorts can be taken, or maybe through options you can have a short position up till first is 18,500 and second is 18,300. On a smaller time frame, so that's the fresh supply zone, which was the turning point when Nifty made a new high last December. That was a turning point, and this is the supply zone, which is right now in play. And the minimum target here looks like if tomorrow we continue to fall, this will come at least towards, let's say, 18,500 in the next few days. Or maybe even tomorrow if there is a big fall. Today the US markets are closed, so maybe we'll see more action tomorrow onwards. So that's a demand zone, a fresh area of demand zone for short-term trades, multiple ones. So you got to be careful. I would prefer the 18,400 one. But this looks like there is a lot of selling pressure as we go beyond 18,800. So beyond 18,800, again, you can look at getting into some short positions. And if you want to know the swing target, the first minimum swing target could be, let's say, around 18,000. So pretty good reward to risk on the short side, but cautious on the long side. Longs can be played on the intraday, and on more confirmation, you can get into some good swing shorts. A quick look at India VIX. It's just hovering around there. It hit a new low and started moving up. So India VIX also might support more downside if it starts moving up towards, let's say 12.73. We could see 18,550, 18,500 on the Nifty. So be cautious about longs, and on more confirmation, short should be the bias for now. Taking a look at Bank Nifty. Now, Bank Nifty is much more weaker as compared to Nifty, as I've been mentioning in the last couple of sessions, market pulse sessions. So after hitting a new high, it failed to give a new high. The area of demand zone that for targets, at least if you want to look at, is this. It's very wide, and that's how it is on the higher time frame. But best areas for demand zone, I mean, to go long for positional is about 33,000. Too far right now, but monthly does not show us a great picture of demand anywhere. Let's see on the weekly chart where the next area of demand zone is. Now, after this high was printed, we did a decoy and we have started to crack down. Now, once we close below, let's say 43,300, that's the area where we have been seeing rejection. Once we close below this, that opens up a bigger fall for Bank Nifty, at least up to, let's say, 42,300 to maybe even this area of demand zone on the weekly chart, because we are pretty overextended, one-way move, and that's the area that I'm targeting for some long positions. Otherwise, the minimum first target would be, let's say, 42,800. And the next target should be 42,000 and 41,500. But probably this month, I don't know. But anything can happen. We can have a candle like this in 1 week, and we are at 41,800. So anything can happen. This is not a great move for. There are no demand zones unless until we hit 41,400 area on the daily chart. That's the area where there could be an arrest to the fall that we are seeing if it starts coming below 43,300. We could see it moving easily up to 42,500 because there are no demand zones here. And the next area of demand zone, which is fresh, is 41,700. So this is where we can look at some longs and short targets. Looks like Bank Nifty has found a top. Now it will start moving down. This was the first initial shock. This was the retracement where sell orders were filled, and prices would easily continue moving down because there are no demand zones, at least up to, let's say, 42,800. The passage is quite clear to Bank Nifty. So avoid getting longs until that time. And if tomorrow we start moving down, there is a good chance we could break 43,000. And once 43,000 is broken, the trend shifts. And then we can expect higher targets in Bank Nifty, let's say somewhere close to 41,500 to 42,000 as short swing targets. Longs will only be on confirmation. So a slightly bearish bias that I have, and cash longs in selective stocks are allowed. FNO longs should be avoided, and based on your risk management and risk appetite, you can get into shorts through futures or options, and then plenty of shorts available in all the stocks. So you can look at banking stocks, you can look at metal stocks, avoid pharma. IT looks bearish as well. So be cautious about getting into FNO longs. Long-term investment, did not worry. Right. Hope that helps. Trade well and trade safe.